Moving on to the next section, we'll be going to our VC panel, which we have a great lineup. Taylor Oliver is going to moderate that session, and then we'll have speakers from Plug and Play, Prologis Ventures, Sway Ventures, and Volition Capital. So without further ado, I'll bring Taylor on stage and I'll do a quick introduction of everyone. So Taylor is the supply chain fund coordinator for Plug and Play Ventures, and he's, for us, he's been huge. He's been helping us with a lot of introduction to the VC world since we're one of the portfolio companies under Plug and Play. And he'll be moderating the session. We have Mike, who's a good friend of ours, the founder of Plug and Play Supply Chain. We have Justin Young. He's an investment manager of Prologis Ventures. Vince, I won't say the last name because I'll screw it up, but of Sway Ventures. I'll let him give us his last name. And of course, we have Jim from Volition Capital. So Taylor, go ahead and take over from here. Thank you so much.
Perfect. Thanks, Matt. And a lot of great content so far. And one question I'd really want to piggyback off of is the capital that's in the market right now. And how do you see SPACs and these IPOs affecting early stage valuations? Are you so concerned about the valuation when you're investing right now? Are you okay going a little higher than maybe even 12 months ago? And so I'd love to start here with Vince.
Sure. Thanks, Taylor. In fact, we had a discussion around the SPACs yesterday with Inside Sway Ventures, and it was really centered around, making early investments right now in the seed stage or Series A companies. And as they progress and mature, will they be able to take advantage of SPACs, say in the 2 to 3 year time frame? There's more premise around, is the SPACs just a wave of a fad right now, because we've gone through a number of different SPAC waves, and they generally last between maybe 16 to maybe 24 months, and then they disappear. But I think we're going to see the SPACs, stay around a little bit longer. And why I say that is the SEC changed a few rules around that, where they allow the private investment in public entities, what they call PIPEs. And so they're more active now, where they come in at a negotiated rate, generally a little bit lower, and which I think is going to help the SPACs stay in the market and stay more prevalent than where they are now. But I think the biggest challenge in the SPACs, particularly in the space that we're talking about now, is the quality of opportunities out there. I mean, a lot of companies are starting up in the whole transportation logistics space, how to make it more efficient. Talk a lot about collaboration today. So it's the quality of the companies that I believe that are going to be the challenge for the SPACs. Those quality companies are always going to be available, but as you get more SPACs, it's just the whole supply and demand type activity.
Great. I think that was a great answer. Would anyone else like to touch on this?
Yeah, real quick. I think SPACs are good for certain companies, and it's great for some investors who want sort of liquidity in their companies. I think we've seen a couple of years ago, before the SPAC craze, a lot of private companies weren't going public and they're sort of waiting, right? So the delay on liquidity sort of took longer than most funds would projected it to be, which is sort of the trend, right? At the same time, I've seen a lot of sort of logistics companies go SPAC, right? Which I think for a lot of investors, you would have said a little too early, right? Top line revenue isn't something you'd expect for a SPAC company, to hit public markets with, and margin compression was definitely weird. But I think it works for some people. I think from an investor standpoint, our sweet spot is a Series B, right? So we won't see sort of SPAC investments hit that 2 to 3 year horizon, but we still look at first principles sort of investing, right? Can companies scale? Is their product market fit? Are they solving real ROI? Do their margins look good, especially in the logistics business when margins are sort of compressed, right? Is there a clear sort of runway to where product could affect margin, right? So for us, it doesn't make a big difference since we are investing a little bit earlier stages, but the SPAC market has caused a little bit of chaos.
Mm-hmm. That has, certainly has.
Yeah, and I'll piggyback off of that. I mean, we've had a lot of our portfolio companies are starting to ask about it because people are knocking at their doors. And one thing we've been telling them is SPACs are not a true liquidity event. It's really a fundraising event. So you kind of got to believe in the growth story thereafter. And I think there are some great SPACs out there. And then there's some other folks that are just kind of riding this wave of SPACs. And to Justin's point, you need to have a certain scale, go public to gain public analyst mind share and really be covered. So I think the ones that are going to be the SPACs that are going to perform not as well are the ones that like don't have that kind of billion plus type scale, and maybe when public a little early.
Cool. And transitioning here, I'd love to talk about what are some of the characteristics you see in successful Series A companies. And then for Mike, I also want to hear from your perspective, why did you ultimately invest in Zoom? So maybe we'll start with Mike and then go over.
Sure. Well, I think we invested in Zoom before the Series A level, like the other investors here. But when I started the supply chain program back in 2017, I remember we had amazing founders, like the founders of Flexport and Project 44 and others that would come to our initial events. And I remember Zoom specifically, we saw so many great founders, but I loved kind of their background in the logistics market at JB Hunt with Mustafa specifically. And I loved kind of the ability for them to build a great team. I think Matt and Mustafa on a team level really complement each other in their growth. And then whenever we put them in a deal flow with our corporate partners, they would convert a lot of these corporate partners of ours into customers for Zoom. But then also they would help us out because the corporate partners would always give good feedback. But we kind of just invested a lot earlier than the other investors here. So it's been amazing to see the growth with the new $13 million round that they closed this year. And also like the huge other metrics that they're hitting. I think it's exciting, but it's just the beginning. I keep on hearing from these guys that they're going to do a big IPO over time. So I'm very excited. I know they're always very ambitious, which is great, but they still have a long way to go.
Right. And maybe we can now transition we'll start with Justin this time on what are some, characteristics and key patterns you see from successful Series A companies.
Yeah, so that doesn't apply just to Series A, but I think, venture-backed companies in general. What we try to look for is and I mentioned it before, product market fit. Does the product solve a real problem, and or does it bring real value to users, right? And I think that's super important. Some of our more successful companies, had founders that one came from industry or had founders that understood product and product-led sort of sales. So, like we'll take Locus Robotics, for example, a company that we've invested in. They're one of the first AMR robotics companies that reached unicorn level. And what really interested us was from day one, they were super clear, right? We are really good at one thing. It's pick and pack robotics, e-commerce automation. And here is a clear ROI, and here are clear implementation processes for us to bring you ROI, right? So I think what we try to look for is the product value simplified? Does it make sense for the users? And could you repeat that and scale that to the next level?
Great. Maybe we'll go Vince next.
Okay. Oh, yeah, I have to agree with Justin with regards to this series, these companies that do well through the Series A. I think, yeah, the product market fit, but also having that clear vision of the strategy, and having that you mentioned about the purpose, solving a purpose, but what is that defensible technology that you have in the business, and how you're focusing that on the growth. Too many times where I see unsuccessful Series A's is when they maybe change the course in the strategy because they didn't see the revenue growth through their Series A. But you have to really go back to what your vision is and where you looked at from the execution standpoint, and what went wrong, what went right, and kind of look at it from that aspect, and then look at the market space and what is that defensible technology you have that you can propagate out there.
Great. And just transitioning here. So I'm always interested, how much time do you spend with your portfolio companies versus sourcing new deal flow? And, you know, Jim, Volition writes the largest checks here. So really interested to hear from you how you think about portfolio support versus sourcing these new deals.
Yeah, I mean, we have a team of, I don't know, maybe 8 analysts that tend to handle a lot of the initial sourcing outreach. And that frees up the for myself and the partners to really work with our portfolio companies. We've always made it really concentrated to the fund. So we're pretty selective. We'll make 3 to 4 investments on an annual basis. You know, you figure that maybe you sell 1 or 2 in a given year as well. So at that point, it feels like we have enough time allocated, you know, from kind of VP level up to work with our portfolio companies, making sure that we're showing up to every board meeting and really being a value-added partner. But when you do take that concentrated approach, you can't have any zeros in the fund. You know, you need to feel really good about the sustainability of the investment. So we've been a little bit more focused on capital efficiency than other funds. But I'd say like a typical analyst, they're spending probably, if they're not working on a live deal opportunity, 60 to 70% of their time sourcing, and then you know, working on deals, and then you know, VP level up. It ebbs and flows, but I'd say you know, around board meeting season, you're spending the large majority of your time with the business.
Great. And you know, then transitioning to the super early stage with Mike, how do you spend your time?
Well, it's not, I should ask you the same thing, Taylor. We're on the same team. But at the end, I mean, I think it's a team effort with us at Plug and Play and within the supply chain team. We have a great team of, like Jim was mentioning, ventures analysts. We have a great team of folks that are working like yourself, Taylor, with VCs, and also a ton of people working with major corporates. So I think we have to spend our time at Plug and Play among the whole ecosystem. So obviously we have people that just do investments. We have people that just meet with corporate partners. So I do a little bit of everything, but at the end, I think from our side, we really need to leverage our corporate network to help our portfolio startups, and also use our corporate partners to help identify investment opportunities, as well as giving value to the corporate partners. So it's this kind of like win-win-win scenario that we built at Plug and Play that just kind of works for everyone. And we've had a lot of success with it since Saeed invented this model and back in 2013. And I built this for the supply chain industry, but I think it's an incredible model just for kind of helping everyone in this whole ecosystem.
And then, you know, Justin, asking you here with Prologis Ventures, one of the best CVCs in the world, what are some of the unique value adds you see? And then what are some of the pushback that you get as a CVC as well?
Yeah. So I guess, you know, the number one question we get asked from founders and companies is, as a CVC, what value do you bring to our company, right? And I think most of that value is usually asked through introductions, right? Introductions of our largest customers. And for the audience, you know, Prologis, we're the largest owner developer of logistics real estate. So, you know, the who's who of supply chain operators are leasing our buildings to some extent. And founders want a piece of that, right? They want introductions to Amazon and Walmart. But I think what we try to do best, and this goes back to what my previous comment is, you know, sitting down with the founder and working through an approach, a strategy that really brings value. And again, like, value in this space is so important. There is so many companies, so many digital freight brokers, so many supply chain solutions, and it's crowded, right? And how do you get in front of a chief supply chain officer and pitch your solution that's differentiating from someone else? It not only come down to the team, it's not only the product, but it's really your approach. So we've seen so many of these companies, and we've helped a lot of these companies sort of refine that approach to chief supply chain officers. And that's really ultimately our value. And we want to offer a solution that we invest in to our customers in a more formal way. So beyond introductions, that's also what we want to do. We want to be the arms merchant to our customers to some extent.
Great. And as we rush up on time here, I'd love to end with a final question, just about why should a startup want to work with each of your firms, and then what trends are you particularly excited about as we shift back from work from home and shift more towards the office? And maybe here we'll start with Jim.
Yeah, sorry, cut off for a second. Is it you just said what are we expecting in a post-COVID world, basically?
Yeah, what are you expecting in a post-COVID world? What trends are you excited about? And then why should a startup, want to work with your respective firm as well?
Yeah, I mean, post-COVID world, I'm excited to hit the road again. I tend to be a road warrior before this, and I was probably traveled every other week to go meet entrepreneurs face to face. I think that's great for relationship building and helps stand out for Volition at least. And we've obviously lost that via Zoom. But outside of that, I mean, one of the reasons I think folks work with us is, I mentioned, we do take a concentrated approach to the fund. So tend to think about being a true value add investor where, we're showing up to every single board meeting, we're always a phone call away. We want to be the sounding board that our founders and entrepreneurs are giving us the first call whenever they have a question. So we've done a lot around like how Volition adds value. We created and announced a strategic advisory board recently with kind of the best of the best in every vertical. So yeah, excited to get to meet people again face to face is really the thing I'm looking forward to.
Great. And maybe we'll go to Vince next.
Sure. I have to agree with Jim. I think getting back out in front of people is one of the most beneficial that I believe that I'm excited about in the business. I mean, I've talked to Matt and Mo a number of times and the team via Zoom. I look forward to meeting them. Okay, and then I'll teach Matt how to say my last name. But anyways, the more from a technology point of view, it is really, how do these companies share risk out there, risk management? What are some of those data analytics and real-time monitoring that, can help identify some of these anomalies that we saw in the supply chain during COVID? So those are some of the trends that we at Sway are trying to look at and look at companies that are solving some of those needs. Now, from a point of view of attracting to Sway Ventures, I mean, we too try to look at the whole value add that we provide, mainly around business development, product technology strategy, and also future capital raises. We do spend quite a bit of time, identifying companies and spending time with them even before we invest in them, getting to know them, understanding their track record, so that when it does come time for their next round or subsequent rounds or intermediate financing, we already know them. And we're already trying to provide value to them, and they already know us.
Great. And we'll go to Mike next.
Yeah, I have to say I have a love-hate relationship with COVID. It's been exciting to see the supply chain market and the growth of startups and our program overall. I think business for us has been great during COVID. So from that aspect, we can't complain too much being in the supply chain market, where the increase for need for visibility, automation, and all the challenges in the supply chain industry with technology becoming increasingly important. So from that aspect, it's been great. But from the aspect of obviously not seeing people is draining and not fun. So obviously excited to be back meeting with people in person, but always more excited than ever about the supply chain industry every single day.
Cool. And then Justin, if you can circle up here and close us out.
Yeah. Yeah, I'd say one, it's pretty weird as an investor to make investments in companies sort of sight unseen, right? Not having to physically in person meet founders and see the tech and touch the tech, right? So it's sort of a strange thing, but with Zoom and it's been sort of a seamless process. But I'll just say, piggyback on Vince's point, I think what we've realized in the pandemic is there's areas within supply chain that we didn't, I guess we took sort of for granted. Some of our theses that we've developed over the years had really, surfaced, right? The importance of frontline labor and workers within these warehouses and within the supply chain in general. Super important, right? We've seen volumes for e-commerce pick up. From a Prologis standpoint, business has been good. People need warehouses, but I think at the end of the day, the most important elements to supply chain are really the people that operate in them. So I think as we think about supply chain, how do we support the people that work in the industry, whether it's from frontline workers or the drivers that are moving the freight every day? I think we've come to this realization that there's a lot of investments we could be making to support the industry, not just from a technology or automation standpoint, but from the people that operate in them. So I hope that was a good closing remark on our passion for the industry.
Absolutely.
Hey, can I ask a quick question?
Yeah.
Thanks, buddy. So the theme of everything we're doing today is collaboration. So I'm going to propose a hypothesis to you folks. Mike and Plug and Play is super successful, and they have 500 plus corporations that need a whole host of solutions. And they've been really successful lately raising an actual vertical fund on the supply chain, because the supply chain is the most successful vertical at Plug and Play, and they're getting close to that. And then Justin, you represent one of the largest or the largest warehousing company in the world with a host of manufacturers that need a whole host of different solutions. And Jim, you're like the powerhouse that could bring in, and Vince is like the oracle that could guide these startups, right? And Matt and I have been like secretly putting together a group of 30 or 40 startups that are complementary, like Dock 411, truck parking, fuel while you're stopped at a truck stop. What we need is a collaboration or a flywheel of venture or capital to back that up. And maybe that could even be automated. Would you guys ever be open to that kind of synergy?
We're open to it, Mustafa.
Like, I'm saying, like where we build a flywheel that could benefit all the different capital sources together, almost like an alliance built on collaboration, maybe even automated.
Yeah, I think this industry definitely needs more collaboration for sure. Where we, and I'm sure many users of these solutions sort of struggle, is linking these different I want to say point solutions, but linking these different solutions that are super important for the industry together, right? What's the glue? And if we talk about areas of focus that I think get us particularly interested in is middleware, right? How do you link the visibility platforms with the brokerage platforms, with IoT sensing, with inventory planning together, right? And in a more meaningful way. So yeah, I think collaboration is super important. It's the only way to bring these solutions together.
Yeah, I have to agree with Justin there. I mean, when we talk about fragmentation in the logistics business right now, I see that as a lack of collaboration. So Justin mentioned about the glue. The lack of glue is the fragmentation. The glue is the collaboration. So the more that we can get, either through discussions like this, or more we can get groups that are concentrated on collaborating in the market space, I think that fragmentation, I don't think it'll ever go away, but you will kind of reduce that level that's there now.
Cool.
Blessed that you guys could join. Thank you so much.
All right. Well, thank you so much, Taylor and panel. This was a great discussion. And I think one thing Mustafa brought up, which is a great point, is let's bring the glue that brings the industry together. and together we can collaborate and solve a lot of the pain points the industry's facing. Our industry is still somewhat behind, as we all know, especially logistics supply chain. So the only way to really skin the cat and get there is bringing all the different parties influencing it, and really starting to ideate and work together and break down those walls. So thank you so much all of you for joining.